So I said, you said I mentioned condition, right? So what I want to say
Yes.
condition is, if the market is bearish, definitely your inducement is at the swing high.
Yes.
I
Yes.
mean, you'll be looking at a point of interest above that swing high where the inducement is at.
Yes.
If it is now in a bullish condition, your inducement is at the swing low. Now, when you check the higher time frame and then you identify that, you mark out where your point of interest is. Now, what the market would do, the market would take out that lower time frame inducement. Then it's now going to give
Mm-hmm.
a reaction without necessarily taking that higher time frame on first. You get, because the higher time frame becomes the major.
The major.
In it is like the major in
Yes. Yes.
because that is the higher time frame.
Inducement. Yes.
Yeah. But
Yes.
in this condition, what you're going to see here is this pullback took out this liquidity. When you check the
Yes.
daily time frame, meaning in the daily time frame, that
Yes.
structure within this movement. You get it?
Yes.
And
Yes.
then
Yes, please.
took out all liquidities here
Yes.
based on the daily time frame. So you can now see
Yes.
that since this took out liquidity on that lower time frame, this is now your inducement. Since you have this took out liquidity, the market
Yes.
has a high possibility of just respecting this zone without necessarily taking it
Mhm.
above. So now what you can see now is price then return. And then this week took out
Yes.
all the liquidity above this other candle.
Yes.
So this bullish
Yes.
candle did not close above this high point, this other candle, neither above this one.
Yes.
It just took out the liquidity and then we had the bearish fall. So that is why when you see from switching to the weekly, we have this clear perspective. We can't find inducement here. This is the ideal
Mm.
inducement. You get. But because
Yes.
you have to
Yes.
utilize time so that you can take a trade entry, you have to utilize time. Then
Mm-hmm.
go to the lower time frame to look at the micro delivery of price.
Okay. Okay.
Yes. So that is now when you go to the daily time frame. So so you can see now from the weekly time frame, this is the high that is your inducement, right?
Yes, that's the inducement.
So I
Yes.
can see that they even went for it a little, but still,
Yes.
they didn't take it out.
Like it
Let's
seems to be just on point.
Yeah, it seems to be just a little bit close to it. I think it took it out. Okay, no,
And it took it out.
let's see.
It took it out. It took it out.
Make sure
Yes.
I'm on it.
It took it out.
It took it out.
Yes. Just a little bit.
Just a little
Yes.
bit. So you can see it took it out just a little bit. But then,
Mm.
this is now also a strong zone. That is why you can see that it didn't take it out with a full impulse to the upside. Because you can also see that this candle here took out this high, this high. You get. We
Yes.
have a graph of liquidity
Yes.
here. We have a graph of this liquidity, this liquidity. You getting it, sir? Chris?
Yes.
Yeah.
Yes. Yes, please.
Even if you are taking your position here and then your stop loss quite above, it's still safe because it's just
Yes.
a bit above. If you are considering that this movement took out these liquidities, you get it.
Mm.
Because what you
Yes.
want to
Yes.
see is when you want to identify your point of interest, you want to see that that point of interest takes out a liquidity too.
Liquidity. Okay.
Yeah.
Okay.
So this
Mm-hmm.
took out this liquidity. So now you can see from the daily time frame, we have this liquidity. Now, when we went to the weekly, this is now the major. You get
Liquidity inducement now. Mm.
or inducement, and you can see how price went, took out this, and in extension, we can see that
Then
it just wicked just a little above it. You get,
yes.
and then
Yes.
price fell.
It fell.
It fell.
Yes.
There are conditions where when you identify also you have an inducement in your lower time frame. There is a possibility that
Mm.
would respect the zone above that inducement. You should expect the possibility that it will respect the zone above since it's going to grab the liquidity resting here. You get it, Sakris?
Yes.
So you can see that if
Yes.
we should use our fib, this is not
Mhm.
necessarily up to premium. So
Yes. No. 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 It's not. It's not. It's not premium
let's use the fib from the high to the
to the low. So this, I'll just let it go. like that because it did not come to the premium area
Now,
at all.
it did not come to the premium area, but you don't really necessarily have to let it go. That is why I told you rules are set to guide so that somebody doesn't encounter losses. You get. But then
Yeah.
mastery, you understand, you have mastery, then you know that you have the possibility of taking some certain steps in the market.
Yes.
It's not all
No.
positions I take at discount or premium. Since I understand,
Uh,
okay, I'm expecting some certain delivery. You get.
yes.
Because now,
Yes.
when we are looking at this is more of like, this is decisional point of interest.
Yes.
This is a decisional point of
That's the
interest.
decisional.
So in the premium zone, we'll have the main point of interest.
Yes.
So it is called
Mm-mm.
decisional because you would possibly want to wait to see how would price deliver there before you take an
Over there.
you get it
Yes.
before you take an
That place is 50-50.
yes, it's 50-50. You get the concept.
Yes. And if I could chip in this one, like this one, just like it looks like this single candle that blocks something like that.
Yes, yes, yeah. It looks like
Yeah, it looks like that.
yes.
Mm,
So you can see that it went up, took out this liquidity,
yes.
and closed below the high. You can see it
Mm,
closed below the high points. You can see this is telling you that the pressure of the buyers was overcome
by the
by the
sellers.
sellers. You get
The sellers. Yes.
so that is why I
Yes.
said you can it mustn't be premium, but there are set rules so that you can trade safe. You get it?
Okay.
There are set
Okay.
rules so that you can just trade safe. So
Safe.
now
Mm-hmm.
the single order block, it took out the high, closed below the high. So in the case you
Mm,
see this, you can just be patient, you get, to wait for the next
yes.
candle. You get, you can just wait for the next day candle to see if the next day candle would continue to the downside. You get it?
Okay.
Yes.
Yes.
So in this case,
Yes.
because you
Yes.
know that, okay, this is not in your premium, this is just a decisional point of interest. So you can just wait to see the close of this day and possibly the next day. You get it?
D. Okay.
Then you
Yes, sir.
begin to frame the entries. So now you can see that here we identified this price return decisional point of interest. Anything
Mm,
the 50% is now where we can have the major point of interest. You get
yes.
all right. We have price pullback. Now you can see, and you identify the higher inducement, which we can still see that clearly that yes, price took it out.
Mm,
Also took the
yes.
so we have the fall of price to the downside. So since we have this is the low that took out this inducement. This low took out the inducement from the daily time frame. Are we together, Mr.
Yes.
So it
Yes, please. I'm here.
went from this daily time frame and created this other high and also took out this. So meaning it means that we have basically now the structure is here we have the high, here now E
Yes.
low, now price
Becomes the low.
the high.
Lower high. Mm-hmm.
You get it? So now we're trying
Yes, please.
to map out the structures. So now you can see the fall created this low. Now we have the lower high.
Yes, please.
Now price fell to the downside. We can see price took out this low point.
Yes.
So price took out that low point. So we want to identify now the internal range liquidity. You know, the internal range liquidity is in the form of the fair value gap and the swing high points. Okay. So
Yes.
in this case, it is
Yes.
buy side liquidity we'll be looking forward to.
To take out this one.
For it to take out the buy side liquidity. And in confidence of taking
Mm,
out the buy side liquidity, you want to identify sponsorship candle too. You want to identify an order block or a breaker block that is above the buy side liquidity. So now
yes.
you can see now this is our low point. Price went to the upside. Now what you can see is price took out this liquidity, price took out this liquidity, and then we had the fall of price.
Yes.
Now what you can see here, we have a flip zone. Let me show you the flip zone. Now you can see this is the bullish order block, right?
Yes. Yes.
And you don't want to identify bullish order blocks in a bearish market trend
Yes.
because the market will be violating those bullish order blocks.
Yes.
You can have a reaction at the bullish order block, but then it's not going to hold price for long. Price is going to
Yes.
because the main trend is bearish.
It's
To
bearish.
be paying
Okay.
attention to bearish order blocks.
Yes.
So now this is a flip zone. What do we mean by a flip zone? A flip zone is basically a zone where you can see that a bullish order block creates a bearish order block, or a bearish order block creates a bullish order block. Supply turns demand,
Okay.
turns
Okay.
supply.
Supply.
You get it?
Yes, please.
Now, since you can see this is a fall of price, we have the break of the structure. Now, this is the bullish order block. Now, you can see that within this bullish order block zone, you can see price created a bearish order block. Are you seeing it?
But it's isn't it like an inside candle of the previous bearish candle? Okay, it's not an inside candle.
It is not.
That it's not. It's not.
It's
Yes.
low.
Yes. Yes. It's not. Usually, I think of the bearish order block to be taking the previous candle's high,
Yeah, yeah,
to confirm it to be the yes, the other block. But in this case, I see it like it hasn't taken out the previous candle's high.
yes. Now,
Uh-huh.
now that is why I said there are rules. You get it? And basically, these rules are given to just make things simple or to just help traders not to take some certain positions till the
Some
market
laws.
improves. You get? Now, the
Yes.
concept of the order block I taught on YouTube is more of like the the elementary perspective to order block.
Okay.
You get it?
Okay.
Yeah. So the ideal order block based on Michael Anderson, Michael Anderson is the creator of smart money concepts. So basically, what he says the order block is this down close candle that sponsored a bullish move is your bullish order block. You get it?
Okay.
The last down close candle. What
Yes.
do we mean by the last down close candle? You can see now for a bearish market structure, sorry, for a bearish market or a bearish candle, the open is at the high and this is the close.
Yes.
So this is the
Yes.
last down close candle before the bullish move.
Okay.
That's the
Okay.
order block. To make people understand that you just have to trade safe, you want to identify the candle that takes liquidity. You get?
Yes.
Yes, just
Yes. That's what I look out for.
here.
That's what I look out for.
Yeah,
If I don't see that this bearish candle takes out liquidity, especially like this one,
you leave.
I'll not consider that one.
See, that is it. When you check the market, there are a lot of price reactions at candles that did not take out liquidity. So those also are
Yes.
order blocks. Okay, for example, let's look at this one. Now, this is the last down close candle, this candle here, before this bullish move.
Yes.
Seen it? This is an
Yes, please.
order block based on the advanced theorem. Are you getting it?
Yes. Okay.
And you can see price reacted a little from it and push upward.
Yes. From the
Main direction is bearish. That's why price
it's
rejected
bearish.
it. You get
Me, I usually I would take the green one because it has taken the previous candle's low.
yeah,
Okay.
yeah. So you see, for the case of such kind of order blocks, since you're not really used to it, you just wait to check the lower time frame. You get in such order blocks, you don't
Okay.
want to put a pending order. You get it. You
Yes.
get. But basically, the theorem
Yes.
behind order block is the last down close candle before a bullish move gives you the bullish order block.
Other block.
Yeah. Why for the bearish, it is the last up close candle. You get it?
Okay.
Yeah. So
Yes.
the
Yes.
last up close candle before the bearish move.
The bearish
To
move.
say is in this bearish trend, the institution manipulated price and bought within this candle. Meaning the institution placed a
Yes.
buy order. That is why it is called order block. The institutions
Other block.
buy order against the ideal movements. Instead of having
Yes.
close prices, the institution pushed an up close price. You can see we are having lower prices, right?
Yes.
Now, we had this lower price. Price gave us an up close price. Price gave another lower price. But then, here we come. Price gave us a lower price. But then, you can see now we have a higher price. Meaning the
Yes.
manipulation took place in this candle. This candle did not give us a lower close of price, a down close of price. It gave us a higher close of price. So
Yes.
meaning institutions sponsored that candle. So now we have a flip zone here because we can see that this demand turned supply. Within
Supply.
they created a supply zone, which is this bearish order block. You get it, sir?
Sure.
All right.
Yes, please.
We have the break of structure to the downside. What do you want to identify? Your inducement, right?
It's taking, yes, the inducement.
Now you can see that. Now, let me show you something. Now we have, let's see if this movement took out this low. Let's look into that. It took out that low, right?
Yes.
Let's look at something. You can see that this is not a valid pullback.
I believe these they are all inside candles.
God bless you, sir. They are all inside
Yes.
this bearish.
Inside candles.
So this is not a valid
Yes.
pullback. This is
Yes.
the fall. Now let's look at that. We have this fell like this, right? Meaning this is our,
Yes.
and then this is the fall.